Hello, Uncle Jim here. I earn really good passive income on a monthly basis. Today, I want to share with you how you can also do this, especially if you're an investor and you have your own portfolio. So, stay with me. I think you're going to really enjoy what I have for you. Okay, let's go ahead and jump in and talk about the keys to selling options. Now, I've been selling options for over a decade. I started with covered calls and I primarily only did it on Coca Cola. And it was because I inherited a lot of Coca-Cola when I was a teenager. So I found this is a nice way to actually make some additional income. About 2 years ago, I decided I needed to learn more about selling options. I wanted to do it the right way. So I started this journey, and this YouTube channel, as well as my blog, came about because of that. I wanted to learn the right way to do it. So I'd started to kind of investigate. I looked at other people's channels. I read a little bit. I read articles about selling options. I read a little bit in books, not much. I couldn't find many good books out there. Um, but the easiest thing for me to get started was just to jump in and do it. So when I did my first cover call, I actually did it over the phone with a Schwab investor guide, and he helped me through it, and I was able to do it. And then I did my next one. By the second or third one, I kind of knew what I was doing, and it was working out fairly well for me. And so let me talk a little bit about covered calls because I do think they're the greatest way to start, and I think it's the safest strategy, and it's a great way to make some passive income. And if you own stock, especially if you have a portfolio that has stock and even ETFs, you can also sell covered calls on ETFs. It's a great way to make extra income. So when you sell a covered call, and I'll use the example of Coca-Cola. So say Coke's at $60 and I want to sell a covered call. What you first do is you pick what price you'd be willing to sell the shares. So for me, I typically would do 10%. So if it's selling for 60, I would say, well, I'm willing to sell it for 66. So I would then sell an option, a call option, and someone would actually purchase it and pay me premiums. And they're buying the opportunity to buy those shares from me at $66, and they would pay me a premium, usually, over close to $100, 75 to $100 per contract. And again, each contract is 100 shares. And what would happen almost all the time, and most of the time, mainly because I was picking fairly high prices, they would expire outside the money, meaning it would never be assigned to the person. It would never actually sell. So I would just keep the cash, and it was a great way to actually bring in extra income. And for the longest time, what I've figured out is it was almost like doubling my dividend. So if I was making 3% dividend, I could double it to a 6% dividend, and which worked out really well. If you think about it, if you got $1 million portfolio and you're trying to do something like the 4% rule, and you're earning 40,000 a year, well, if you have a pretty nice portfolio and you have it well invested in good companies and good ETFs, and you're earning a 3% dividend, and you can double that dividend, that's like earning 60,000 a year on $1 million portfolio, or a $500,000 portfolio. You can half that, so you can kind of do the numbers. Um, and that can really have a major impact on your portfolio. You can really, if you use the rule of 72, and if you're not familiar with the rule of 72, you just take 72 and you divide it by the interest rate, not interest rate, but the growth rate you think you can get for your portfolio. So say you could get a 10% growth rate. You divide that 72 by 10, and every 7.2 years you could double your portfolio potentially. Now, if you can earn an extra 3%, again, if you're averaging 3% in dividends and you can double that to 6%, well, really, if you were earning a 10% return and you can earn a 13, well, you're going to be able to double your money in a lot faster pace. So when I did the calculations, I think it was right around, you could double it a little bit more than every 5 years. So instead of every 7 years, you could double it every 5 years. So in a 20-year time span, you could double it, literally four times. So if you start with 100, then it's 200, then 400, then 800 in 20 years versus only three times if it's a 7 percent return. So that's one way you can think about it. And for the longest time, that's all I did. I only did covered calls, and it worked out quite well. So if you've never sold an option and you just want to get started, that's a great way. I really encourage you to take a look at covered calls. Now, once I started to learn the right way to sell options, I also learned, well, you can do the flip. If you want to buy shares, you can sell puts and also make premium. So let me give you a quick 2-second example with that. So say you want to buy a $50 stock, say a Cisco at $50, and say you're willing to pay for it or buy it at $45. Well, that's 10% below. You can then sell a put with a strike price of 45, and again, someone would pay you some money or some premium to have the opportunity to sell you those shares. Now, one thing I do like to do when I'm doing puts or selling puts is I like to do cash secured puts. I typically like to have the money in my account to be able to buy those shares. And I typically, through dividends and through selling options, I accumulate a lot of cash. So I typically have enough cash to do quite a few puts during the year. So it's cash secured puts, meaning again, I have enough cash to pay for it. And so what would happen is, during the bull market with the stock market going up, I typically had none of those get assigned, or very few. I'm not sure I had any assigned, especially puts, especially during 2021. Now that changed in 2022, and I was using the same guidelines of, the amount of risk I want to take. So in the example of 10%, that was pretty much what I was doing. I decided, well, I want to take less risk, so I would do even lower. So in the instance of a $50 stock that I wanted at 45, where I just lowered the price by a couple more dollars, and then I sold the put at that strike price. So instead of 45, I would sell it at 42 or 43. Another way to look at it is to use delta, which is what's called a Greek, or one of the Greeks, and it's just the probability that the option will expire outside the money. And for that, I also use 20 delta, which tended to be about a 10% up or down, like I was mentioning a minute ago. But for selling puts, I decided to lower that, and again, by about another 5%. So I went to a 15 delta instead of a 20 delta for selling puts. And ever since I did that, I've had very few get assigned. It made a fairly big difference. Now, it doesn't mean I haven't had any get assigned with this crazy market. I've had some shares get assigned. But that brings me to another important point, is I'm always looking at stocks that I want to own. Now, I may change my opinion over time. To give you for instance, I did buy Big Lots, and Big Lots went through a really tough spell. I still own it. It was assigned to me, but I don't like them as much as I used to. But again, they may bounce back and things may change. I still own them. I'm looking at maybe holding them until next year, and then at that point, deciding if I want to take a loss on them. Um, but currently, I'm kind of giving them a little more time to see if they bounce back. Some of the stocks that were assigned to me, whenever we kind of bounce back up and the market goes up, they become profitable. And of course, when the market goes down, they're not profitable. So it changes literally week to week. So one of the big questions I get, you may be wondering, well, how much can I really make doing this? And this is probably the number one question I get from people. I've had people ask, well, I really want to make 6% monthly. And during a bear market, that's really, really difficult. I I've never been able to do 6% even during a bull market. I've done 3 to 4, maybe as high as 5% on certain months, and then other months I might do 2 to 3%, and that was during the bull market. Now during the bear market, it's been more like 1 to 3%. Some months might have only been a half to 3/4 of a percent. Again, that's a percent of whatever you're investing. So in the case of like a $50 stock, that would be 1% of 50 times 100, 5,000. So what is that, $500 or whatever, or yeah, $500. I believe that's right. So that's what I've been able to do, and I do think that that it will get a little bit easier, especially when we come out of this bear market. And I do think sometime in 23 we will come out of the bear market. I do think the Fed's going to change their Fed policy or their interest rate policy. I do think they're probably by summertime they may actually start lowering the interest rate. Is a that we can't afford the interest on all the debt that we have in the U.S. I mean, with these much higher interest rates, and I'm sure you've seen it. I've got a home equity line, and I believe before they started increasing it, it was like 3.25 or 3 1/8, and now it's 7.5%. So it's a lot more expensive. I'm actually looking at paying it down mainly because it's such a higher interest rate. So that's kind of the ballpark. So during a bear market, recently it's been between 1 and 3%. I've had other people say, oh, I can do 10%. I've never been able to find someone who can truly do it and show me that they've been able to do it. If you've been able to do it, please leave a comment below. I'd like to hear more about it, but please, add a few of your trades or mention, what you did trade and how you did it and what your portfolio might have looked like. That would be a lot that would be helpful to other people who are reading the comments. So, and as always, please add a comment. I like to answer my comments. I answer them all. I end up liking to get them, get it into conversations as well. Please subscribe, hit that like button. And I do have some Patreon memberships. You can find details about them. I'm getting ready to make some changes at the end of the year, going into next year, on how I actually run my memberships. I'm going to add some more special stuff for my members. Actually, one of my portfolios that I currently have, it's my rolling IRA or rollover IRA. I'm actually going to look at trading it a little bit more, and whenever I get a certain profit point, like 50%, I'm going to go ahead and close that trade and open a new one. I'd like to try to close them if they get to 90% profit, but I haven't been very consistent with that. So I did kind of go on a tangent there, but if you want to take a look below, I encourage you to. It's my membership is growing, and again, I'm going to be adding more bells and whistles. So I'm also going to try to improve on how I'm doing these videos. I'm learning as I go. I'm getting ready to join a YouTube creator membership so I can learn how to become a better YouTube creator. The other point I wanted to mention is with selling options, in some ways it's actually safer than buying stock. I found that it's encouraged me to diversify a little bit better, do a little bit more research into the companies that I want to own, and also to keep an eye on things and earn some extra cash. So I feel like overall it's made me a better investor. So I don't know, it seems like it's another benefit of selling options. And also it's, when I found in the past when we've had major bear markets, I would end up selling at the wrong time or buying at the wrong time. I feel like selling, especially selling puts, has helped me kind of identify the better times to actually buy versus, you know, just literally buying stock. When you're selling cash secured puts, it does generate a lot of cash, and it gives you opportunity to manage those contracts too. That's another whole aspect I hadn't talked about, but there's plenty of other videos you guys can look at. I'll have a link at the end that will talk about how to manage the trades. So with that being said, let's jump into the three trades just above me. I'm going to talk briefly about those just so you can kind of get a feel for what these kind of trades look like, especially if you've never traded. So these are trades I've actually made this week, and I've only done three trades, and I spent I don't think I even spent 2 hours, maybe hour and a half. So I did these three trades early in the week. I sold two covered calls in SDY, which is an ETF that I really like, and I made $251. And again, just like stocks, you can sell covered calls on ETFs. So SDY, if you're looking for a good ETF, SDY is definitely a good one. Next, and I believe this was yesterday when the market was down so much, I sold two vertical put credit spreads in Polaris, that's PII, and I made 221, and this was a vertical put credit spread. So Polaris is, you probably have seen them, that it's almost looks like buggies. They're kind of cool. They're motorized vehicles. It's something I would look at. I've had friends that are into motorcycles, and every one of them told me, Jim, you stay away from motorcycles. You don't have the good balance, and you probably end up killing yourself. But a Polaris is one type of fun vehicle I'd look at actually owning. It looks like it's a lot of fun, and this is one of my most profitable vertical put credit spreads. So I encourage you to look at Polaris. It's another good company, has good numbers, and I've done quite well with it. I've never had it assigned, and I've been able to make good money with it. Next, I actually rolled two covered calls in BP, and BP is another one of the companies I like to work with. A lot of people work with Exxon and some of the more expensive oil companies, but BP kind of trades in a low range. If you got a small account, it's usually between 25 and 35, and I've been able to do quite well selling covered calls with it, and I've actually even sold some puts. So I'm looking to pick up even more BP. So with those, just those three trades this week, and probably no more than, like I said, an hour and a half, I made $610, which put me over my 3,000 goal on a monthly basis. So my 3,000 monthly goal was for this year, and I was able to do even better. I think I did 3,100 for this month, and overall for the year I averaged a little bit better than 3,200. So again, I'm looking at, and if you watched last week's video, my last two videos were related to my goals going into 2023. So I'm looking to make 4,000 on a monthly basis going forward with selling options. And that doesn't even include my dividends. I make another 2,000 with my dividends. And another way to think about it, if you're doing that's almost like the 4% rule. If you can make 4,000 on a monthly basis, that's almost like the 4% rule. So I'm able to reach the 4% rule without having to use the 4% rule. And again, that doesn't even include my dividends. So, if I'd later incorporate the 4% rule, I could even take out more money. So, um, I've found that selling options is giving me a lot more choices and opportunities to do things that I would not have been able to do if I hadn't picked this up and started to learn the right way to do it. Now, plans for my channel, did mention earlier in the video, I'm looking at making some improvements. I'm going to improve the quality of the videos. I'm also going to improve the quality of my memberships. I'm going to have the one portfolio that I'm going to share. It's my rolling IRA. I'm going to pretty much share that whole portfolio and what I'm doing with it. Right now, I currently don't own much in there, but I've done quite well with it this year. I believe I've done about 1.5, almost 2% on a monthly basis just in the rollover IRA. So I hope you decide to join me. Again, I'll re-mention, take a look down below. I'll have details about my memberships. And as always, I hope you have a wonderful holiday and a happy new year. Thanks for joining me.